any projections for the future? So like 10 years, let's say like a portfolio in 10 years, one guy uses an RIA who uses AI, one guy doesn't. Are there any projections how one who uses AI is going to outperform when it doesn't, or vice versa?
Here's the numbers that we put together, and this is something I work a lot on, is this idea of what is our value? What is our alpha? What are we bringing to the table? My goal is 1.5 to 2.5% over a generic, let's say, benchmark. That is my goal on an annual basis over a longer time period. There's certain years. Last year we did a lot. This year it's obviously much tougher, as Chris was talking about earlier. But I do think that it has the potential of adding. It's not 500. I think you're fooling yourself with that. But I think it has a potential of adding 50 to 100 basis points over what you're doing now. And that's all we're looking for. And 100 basis points over a 10-year period is a lot of money. And that's what we're trying to do with clients. In this idea that, I want to make 25% every year, that's not what we're trying to do. We're not a hedge fund. We are trying to incrementally add things that can add alpha. And I think this is one of those tools that can add that 50 to 100 basis points. And that's what we're trying to do.
I mean, it also depends, right, on the client's objectives, right, and how what the outcomes they want. They could be an aggressive investor, or they could be kind of passive and for the long term. So how do different client objectives lead to different uses and outcomes of the AI? And if you can provide an example, that'd be even more the merrier.
Well, I think, Brad hit on it before. I mean, when you design a model and you say, okay, I'd like to, pull off at least 4% income, what's the input to that model? How much in fixed income, how much in dividend stocks, what's going to be in that model? And then you can crank it, you can dial it up. I like to use the, term we're changing the dials, we're pulling the levers, and rather than me manually sitting there, looking at it on a hard spreadsheet, if I can go into AI and go, this is what I'm trying to achieve, and create this band of, potential volatility, because everybody, wants to make money in an up market. They don't want to lose money in a down market. But, you got to be realistic and say, okay, Mr. and Mrs. Client, are you comfortable with, drawdown? And you have to explain drawdown. Okay, you got a $100,000 account. If you lose 20 grand, are you going to be upset? Yeah, I'm going to be upset. Okay, what can we do to get your portfolio going up and to the right with as little volatility as possible? So, I think AI changes that conversation because it allows the advisor to more quickly, build or put together, a portfolio, whether it's ETFs, mutual funds, or individual stocks.
We only have so much time in a day. Right. We look at over 250 asset classes. And for the average human to look at that and know what's cheap and what's expensive, it takes a decent amount of time. And Chris isn't just working on, his investments all day. I'm not just working. We have clients. We have so many other tasks. We have marketing. We're trying to grow. This is an efficiency tool to be able to know and use AI to say, okay, what's cheap, what's expensive, and trying to use those, incorporate that into what we're trying to do. Same thing Chris is saying. We've had a huge run in growth. Has it gotten to a point where historically, okay, maybe we need to move from growth to a little bit of value to manage that portfolio? And we can use that. I call it scenario testing. I think what Chris was talking about in my mind is, what's happened over the last, and we can ask it, is this market, what's its most like in history? Is it like 2017 or 2009? What happened during those periods? What's my risk reward coming out of a period of high interest rates? And when the Fed pauses, give me the last 7 periods that happened. And we can get data very quickly to say, okay, well, this is what normally happens. These are the areas that normally do well. And we can ask those questions. But again, you got to know what you're doing to be able to ask those questions as well.